folks, Dan Frio here, the Mortgage Update. Today is March 12th, 2020. So what's happening today? Well, this is going to be kind of in-depth. So hopefully you know the banking system or economics or whatever. If not, I'll put it in the easiest terms I can get. So what's happening right now? Well, I'm going to focus right now on the mortgage-backed securities market and mortgage rates. Because normally what happens in a normal market is, I always say, there's two buckets to invest in. There's stocks and there's bonds. So when people are pulling out of stocks, they're putting their money into bonds, pushing up the prices because there's more demand. Prices go up, yields come down. We're seeing right now a collapse in the the stock market. And look at this number. That's nuts. Look at the deterioration in rates. Again, we followed this number here. This is the mortgage-backed securities market. This is the price of the bond. As the price goes down, rates go up. As prices were going up, rates come down. When we hit this right here, I locked everybody that we had in our pipeline that was able to be locked. And that was perfect timing. I'm not a fortune teller, but I saw the reversal. I see these charts. It opened up 80, dropped back down within 5-10 minutes, and I'm like, that's a huge drop. It went from 80 to 0 almost instantaneously. I yelled out all over the floor to my loan officers and said, lock, 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 lock. That reversal was huge. That told me we hit a bottom, or at least a short-term bottom. And then from there, it was just, we've gotten crushed. Rates have gone up over 0.5% this week. So if you haven't locked in yet, don't fret, because I have some good news coming for you, I think. So what's going on in the markets? So the stock market's crashing, and we have the bond markets crashing. It's an anomaly. It shouldn't happen that way. Here's what my educated thoughts are behind all of this, and I'm pretty sure this is what's happening. Okay, so part of the Dodd-Frank bill that was created back when the world crashed back in 2008 and 9, part of the Dodd-Frank bill required banks to have X amount of reserves in the bank every night. Well, the problem that's happening right now is with the stock market crashing, people are rushing to the bank and they need money. Okay, and especially it's that time of year too that taxes are coming due. So the reasons why they might need money, one huge reason is a lot of people that had the euphoria in the stock market was buying on margin. Okay, basically they were buying on credit. Now the stocks have dropped so much, now they get a margin call, so now they got to cover their positions. So now they need cash, so they go to the bank and get cash. Taxes are coming due within the next 30 days or so. People are needing money for that, and a lot of people would tap into their investments, pull out some profits, and pay their taxes. Well, nobody's wanting to do that now because they've just got devastated in their portfolios. So the fear is there's going to be a rush on the banks. Okay, now let's get back to the Dodd-Frank bill. The banks have to hold a certain reserve requirement on all of the outstanding debts that they have and so forth. So they have to have a reserve in their account every night. So think of it, your checking account. You have to at all times have $1,000 in there, okay? But you just wrote out a whole bunch of bills, and it's like, oh boy, I'm short money, so I go into my overdraft overnight and cover my position. That's normally what happens. But what the banks do is they go out and they borrow money from the Federal Reserve or other banks. Usually they have to put up collateral. They'll say, you know what, here's $1 billion worth of mortgage-backed securities or bonds or whatever. Hold those as collateral. Tomorrow when I replenish my monies and I get deposits and everything like that, I'll just give you your money back and you release those bonds back to me. That's normally what happens. Unfortunately, there's a run on the banks right now. Don't fret, because it's not hysteria out there. But what's happening now is a lot of the banks are saying, we don't have enough money. We can't do that. So now it's getting to the point where the banks are saying, oh man, what are we going to do now? So a lot of them have been forced to actually sell stuff to meet those reserves. What they're selling are bonds and mortgage-backed securities. So they're throwing those out there saying, we need money. We're just going to sell, 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 sell. When you have more sellers than buyers, it brings the price down. Thus, you're seeing this, okay? So some good news that came in the market today was the Federal Reserve came in and said, we're going to pump $1 trillion in the liquidity into the system. Hopefully that'll stop the bloodbath of banks having to sell bonds, especially mortgage-backed securities, into this market. Why are they selling mortgage-backed securities? Well, because there was a huge run on this asset. I mean, that's a huge run. So they're like, you know what? Well, let's take some profits on this, but we need the money, so we're forced to sell, and they continue to sell, 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 and that's crushing the market. Okay, so what I'm seeing short term, this is good news. Bad news. Good news for lenders because we can catch up. We've had basically more loans than we can even process. Keep coming to me if you need help. We're processing them. Actually, we're working 7 days a week to keep up with demand. So thank you guys out there for reaching out to me. So it's going to slow down the pipeline a little bit right now. This will get fixed. So I think we see a complete overreaction with everything in regards to all of this. So with my short term, I think we're going to bottom a little bit in here. This what the Federal Reserve did should kind of stagnate us into this. It should kind of create a bottom for us. Now, what do I see in the next month, 2 months, 6 months? I see us going back into these areas. Why? Because all of this that's happening is going to push us into a recession. All right. The Federal Reserve is probably going to jump in and reduce the federal funds rate again. They're pumping liquidity into the markets. This is not accurate information. Now it's QE, quantitative easing 4. It's not quantitative easing, actually, what they're doing. They're just pumping liquidity into the markets. And I won't go through all of that scenario, but this is false information. So what happened with Wall Street today, midday, is they saw what the Federal Reserve announced. They're like, oh my God, this is awesome for stocks and everything. So they thought it was QE4. So then euphoria kicked back in the market. The markets came back and recovered. They didn't go back into positive territories, but they recovered. As soon as everybody realized, oh boy, this isn't QE4. It's basically a liquidation cure for the banks that need the liquidity. It's truly not a QE4. The market crashed again. So again, short term, we're going to see, rates coming back. Now rates they're back to where they were back in February, so a month ago. If you miss this rally, I think we're going to get it back again within the next quarter, because the second, third quarter of the year, we're going to see a recession. We're going to see the Fed react. We're going to see the federal funds rate drop even more. And this liquidity issue, I think the Federal Reserve is going to keep pumping money or liquidity into the market till everything stabilizes. Now, the coronavirus is causing, massive manufacturers to shut down or limit production and a bunch of other things. Once this is cured, let's say 30, 60, 90 days, everything kind of washes out, because I'm not going to sugarcoat this thing, but it's an extreme flu. Let's put it that way. The people that are dying are elderly with other conditions, kind of like the flu. Not a lot of 30-year-old, 40-year-old healthy people die of the flu. So it's a strand of, I'm saying the flu. I'm not a doctor, but this is my thought behind it. I think the media is making a huge hype of this. Is it should it be this way? I'm not to say. We might learn our lesson 6 months or a year from now, saying, boy, we overblew this one, or you know what, we didn't take it as serious as we thought it was going to be. I don't know. Time will tell. But I say in the next 60, 90 days, a lot of these cures will be coming out, and the production, manufacturing, everything will start coming back up, but it's going to take time to revamp. Thus, all this is pushing us going to be into a recession. Don't fear, because I think it's going to be short-lived. It's basically a correction in everything, and I think that the good news behind it. I think that we're going to, because of all this, we're going to push back to these levels once again. Not all the way up to here, but we'll be back in this range in the next 2, 3, 4 months, where people have if you missed it, You're probably going to get one more opportunity mid or later part of the year. So please watch out for it. But please keep trying. I mean, rates were the lowest I've ever seen in my 32 years of doing this. So if you're at 4.5%, 5%, there's still great rates out there. But you know, we're not locking in 30-year rates right now in the twos, and that's where we were. So hope this makes sense. My name is Dan Frio. I do the mortgage update on a daily basis on YouTube. I also can be heard in Chicagoland area on radio. I'm on WYLL Radio, 1160 AM, Monday through Friday from 7:30 to 8 p.m. You can follow me there. Or Saturday mornings, I'm on WIND Radio in Chicago. And if you want to check out my podcasts or my YouTubes, check out my YouTubes. You're on YouTube now, but check out my podcast. You can go to themortgageupdate.net and you can find all of my shows. But I take those shows and I actually YouTube them. So anytime you see kind of a picture on the side and a green screen with some charts kind of like this, that's my radio show. I do that every day. So if you need my help, what I've been asking people to do is still keep sending in your loan estimates, your mortgage statements. Let me know where you're at. You know, the loan estimate that you got from somebody else, I was beating everybody and that was sending in their loan estimates. We were getting about 10 or 15 a day. Probably 99% of them we were beating rate and or fees and or both. So continue to send those in. If you got a quote from last week, it is no good. If you didn't lock in, it is no good. So please don't send me, you know, a rate lock or rate scenario that you got last Friday, because it's not relevant. You have to get an update from them from that point. So if you get those, please send them to me. But I am going to check the dates, and again, don't try to pull fast whenever. But I'd love to help you out. So the best way to get me is call me at 844-775-LOAN. That's 844-775-5626. You can also reach me by email at Danny, DANNY, .Frio, and that is FRIO, at preferredrate.com. Now I'm going to spell preferred. I'm trying to be childish with you right now, but some people misspelled it. So it's PREFERRED. So preferredrate.com. And I'd love to hear from you. So please leave a comment down below. I reply to every comment. You can check every one of my videos. As long as it's not spam, I should have commented on that. Give me a thumbs up if you like this. Click the bell down there so you get alerts. Share the video if you would. And I greatly appreciate everything you guys are helping me get through. So God bless. Take care. See you tomorrow.